So what is this? Strong high, right? This will be a strong high. How do you know the high has created the low of the range? You have to get a bullish breakout structure. Okay, low of the range. Why are they moving up? That is to take out the internal range liquidity. Okay, so now this will clearly get taken out, right? Why? Oh, choose the order block that broke structure. Imagine how many are trying to sell it here. Okay, so then swing high, internal range liquidity, and we're gonna do a turtle soup. So what's a turtle soup? Like you if you know ICT terms, you know what a turtle soup is. Okay, selling above old highs and buying below old lows without a point of interest. But yeah, ICT's turtle soup, of course, it has around a 15 to 30 pip stop loss. But what we do is we sell it from above that high like this, stop loss above the strong high. Can you understand that? Internal range liquidity, strong high, no point of interest, we just sell it. Or else you can even just place your sell order in here itself, right, with the liquidity, because anyway your stop loss is tighter, and then we can target external range. Okay, so let's see what happens. There it goes, taps, and it comes down. Did you see that? Okay, so now you're not going to close everything in here. Okay, you're not just going to close everything out in here. Then if you do that, what's the point of just marking out a weekly and a daily range, right? There's no point of doing it. Now, what do we know? Like what happened on the, let me go to the one now. Yeah, what happened on the daily time frame? I told you on the daily, this was the last point with internal range liquidity. This was the weekly point of interest. 1 hour has turned bearish. So now once the internal range liquidity gets taken out, where will they come next? External range liquidity. Okay, yeah. So then what do we do? Yeah, now if you can check my channel, you can see how I left full runners, like full volume into this low. Okay, full volume into this low. Why? Everything is confirmed, right? Bearish, internal range liquidity taken out, lower time frames turn bearish after tapping into these zones. Okay, so now look at this. Even though I told you full volume, it is not like a 10 standard lot size into these lows. No, then I'll be a millionaire by now. Not that. Okay, so I only use the one standard in here. A one standard, because why? If I lost the trade, I'm only losing $30 with commission. Okay, but if it runs into my targets, I'm getting 5K. See that? Okay, so like you're risking nothing, right? That way you're risking nothing. So what happened? Look at the drop into the external range liquidity. Okay, so same exact setup, different time frames. Different time frames.
Can I ask a question, Udara?
Yeah, awesome.
Yeah. So when you marked out your daily range, when you got the bullish breakup structure,
yeah,
and while you wait, while you were waiting for the internal range liquidity to be taken out, would you be looking at down to the 15 minutes for any reaction after
you can do this. Now look at this. Now after you get this bullish break, okay, after you get this bullish break, now like I told you, rather than waiting for these to get taken out, okay, because this is the daily, right? Who knows how long it's gonna get here?
Exactly.
Like, are we gonna wait for months? No, we can't. So what we do is drop into lower time frame ranges. Now that we know that the daily has turned bullish to take out the internal range liquidity, now what we can do is mark out strong lows and then buy it. Stop fund, breakout structure, strong low on the 4 hour. Strong low. We got this rejection block as a point of interest. Why? Because we had liquidity above it. Can you see that? Okay, we had liquidity right above it. So you know why this is liquid, right? Because what have everyone been taught? Choose the order block that broke major structure. Imagine how many are buying it here with the stop loss below this. But for us, simply, this is liquidity. Now what you can do is wait until price gets here, wait for a reaction. Let's see. See, like, can you see how we're using all the time frames? Like, we did not even do the top-down analysis yet. Okay, let's go through that later. Now look what happened. I don't even remember these days, but let's see. Okay. Let's wait until price gets inside of the zone. Okay, there comes the drop. Yeah, there it entered the zone of interest. Now what do we wait for? We wait for a bullish breakout, right? Why? Yeah, because we are currently with, like, are we going to take any sells inside of this zone? No, the buy zone. Okay, so why would we look for sells? So let's wait. Okay, nothing yet. Nothing yet. And there comes the buy. See that? Like, never went below the low. Never went below the strong low. Can you see that? Never went below the strong low. And then we got these bullish breakouts. There we go. Okay. Now we get the confirmation. But the thing is, now timing isn't that good. This is like, yeah, look at the time. It is like, yeah, 8 a.m. my time, 8 p.m. my time. Okay, so that is too late in the day. New York has also, like, that is 3 hours after New York, so it's too late in the day. So let's wait for next day's Asian session to end, and let's look for a setup. Asia starts at, yeah, this was December, so Asia started at 3:30 and ended at 10:30. Let me set to New York times to check. Yeah, 5 p.m. to New York midnight time. That will be Asia. Let's wait. Okay. Asia. Now, can you see what Asia has done? Okay. Asia has created a strong low. Can you see that?
Yeah.
Liquidity taken, structure broken. Not only in here, even in here, we have a little strong low on the 30-minute. Can you see that? Liquidity taken, structure broken. So now what we can do is expect a mitigation into this. Now look how they're, if I remember, I think they made some liquidity. Yeah, there we go. What are they doing? That clear inducement formation I showed you. Higher highs, higher lows, higher highs. What will everyone expect? Higher low, higher high, right? So imagine how much liquidity we have below this. And not only that, see, like this break and retest traders after this bullish engulfing candle, all of them are getting in. So what we could do is something like a turtle soup. Buy it, stop loss below the strong low. Why? Only 3.3 pips. Can you see that? Just 3.3 pips. Okay. And now what do we know? The 4-hour major breakout structure was bullish, counter trend bullish, inside of the range. I'm sorry, inside of the 4-hour point of interest. Then our final target must be all the way up here. Can you understand that? Okay, hope that's clear. Okay, so let's see now. Let's see.
Okay.
Yeah, there it goes. Inside of our zone, liquidity taken out, and then there it shoots. See that? There it starts to shoot up. Okay, so then that same way you mark out ranges and then you buy it. So what happens? There it goes. There it goes. Like, can you see what they're doing? Stop on, breakout structure, strong low, internal range, buy. Same exact setup. Okay,
Yeah.
keep on going, and then you target the external range liquidity that is all the way up here. Patiently wait, patiently wait. That is where you're going to pay yourself. And there it goes. Okay, there it goes. And then what do? Okay, you can even close out everything. There's no problem with that. You can close out everything, or else you can leave runners first into these daily highs. Maybe first you can hold it into this, maybe into this, and then into this. See that? So you can buy it, and then after the buy is done, you can sell it. Can you understand that? Okay, so buy, sell, you can do all of that, but you have to know your higher time frame direction. That's the main thing. Okay, that will be the main thing. Okay, so was that clear? Hope that was clear. Okay,
that was very clear. Thank you.
Yeah. Okay, now let's go to gold. Okay, let me show you, like, not the top down analysis actually. So what we will be doing is, now remember, every single new month you have to look into the monthly time frame. Okay, every single new week you have to look into the weekly time frame, and every single new day you have to look into the daily time frame. Okay, so I'll tell you why I told you that. Okay, let me see. Has it tapped into the rejection block? Not yet. Okay, now it's like this. Every single new month you have to look into the monthly time frame. Okay, this is not just something that happened only once or twice. No, it happens all the time. Okay, let me show you. Why did I tell you that? Now remember, like, we're intraday traders, right? So who cares about the monthly time frame? We're only looking for the POIs on the monthly. Where will the next monthly candle open? In here, right?
Yeah.
This is where the next monthly candle would open. So when it opens here, what's your next point of interest? Rejection block. I'm sorry, order block. Can you see that? Order block and a rejection block. Okay, you understand that, right? Order block and a rejection block on the monthly time frame. Okay, now let's go into the lower time frame. Like, I'm not going to just directly jump from monthly to 4 hour, but for this example, let's go there. And later, once we go into the top-down analysis, I'll show you how to work with all the time frames. Okay, now look at this. Oh, another thing is, see this. Can you see what's the major breakout structure we have in here? This one, right?
Yeah.
Okay, so now what happened? If you took this as a bullish breakout structure, and if you try to buy it here, what do you think is going to happen? You'll get stopped out. Why? Major breakout structure is bearish. So this is not a bullish break. This was only a stop hunt. Can you understand that? It's very important. Okay, very important. These major breaks are Very, very important. Okay, yeah, let's put that aside. When I was not going to talk about that. Now look at this. Stop hunt, breakout structure,
yeah,
strong high. So let's cut this off. And on the strong high, what's the high time frame point of interest you have? Monthly order block.
yeah.
Can you see it? Monthly order block price level. Okay, so let's see. Now we wait for the high to create the low of the range. How do we know the low is created? Bullish breakout. See that? Bullish breakout, range confirmed. Now you have two options. What are you going to do? Are you going to wait until price gets here? Or else you can buy it using a lower time frame range. Right? You can buy it using a lower time frame range. Let's go into the lower time frames. Can even go to 15. Like I do not like directly drop into that. Okay, like I'll show you later once we do the top-down analysis.
Okay.
Now look at this. Major breakout structure bearish, and the 4-hour itself has turned bullish. So we know that it's going to head up to take out maybe some of this internal range liquidity. But look at the 50-minute. The 50-minute has a strong low now, right? Because we have this breakout structure and this stop hunt. See that? So the 50-minute has a strong low now. So let's wait for the low to create the high of the range. How do we know the high is created? We have to get a bearish breakout structure. Can you see that? A swing low, I told you, a swing low that created a higher high has to break. Once you got that break, here comes your range on the 50-minute. Can you see how flexible you can be with the ranges? Okay, you can be very flexible with the ranges. Top hunt, breakout structure, break to the downside, range confirmed. And what's the next thing we do? We use Asia, we take timing into consideration. Okay, so on gold, Asian times are a little bit different. It starts at 6 p.m. New York time and ends at New York midnight time. Same time it ends, but it starts 1 hour later. Okay, so let's see. Let's quickly check with the New York times. 6 p.m. to New York midnight time. Yeah, there we go. 6 p.m. to New York midnight time. See, that will be Asia. Okay, so now what we do is we wait for Asia to end. There we go. Okay, so let me show you the trade I took this day, but it was a little high risk setup. Let me show you why. Because this day we had FOMC coming. Okay, now look at this. A wick below Asia. Can you see the stop hunt of Asia? And look at the timing once again. 11 a.m. Right at 11 a.m. A manipulation of Asia. And boom, starts to go up. Now, what do we know? We got a bullish breakout structure. Same exact principles apply here. Okay. Yeah. Major breakout structure bullish, counter trend bullish. Are you going to look for sells anymore? No, you're going to look for buys. Why? Because it's the range expansion. So now whatever trade you take for the buys, your next target will be all the way up here. Can you understand that? Now we do not know how far up it's going to go into these areas, right? We're not sure about that, but we know that this is the range from here to here. So this high will get taken out. Okay, you get that, right? So now on the strong low, what do we look for? High time frame point of interest. So on the H1, we had this beautiful rejection block. Okay, now let me show you why it was high risk, because this day we had news, FOMC, I guess. So when there is news, what I normally do is like, I don't trade New York. Okay, when there is news during the New York session, I don't trade the New York Open. I wait for news itself. Okay, I wait for news itself, because when there is news on gold, especially, like New York session is not going to give you huge moves. Okay, news is the one that's going to give you the huge move. And you don't have to fear news as long as you know the direction of the market, because news is just a catalyst. Okay, it just makes the original move quicker. That's what it does. Okay, so like, where will price head? You know that, right? To the external range liquidity. So which means if you manage to get a buy from somewhere around here, it's quickly going to run up into these highs. That is all they're going to do. But if there was no news, it will be a slow move. Okay, if there is news, this is what would happen. That's it. Okay, so that's all they do with news, so you don't have to fear that. Now this is what happened. Came down inside of the rejection block and never went below the strong low though. Can you see that? Never went below the strong low that was created in here. Okay, now the reason I told you this was a risky one was because this is what I did. Okay, within the strong low, another rejection block was created, but this looks like equal lows. Can you see that? Yeah. Okay, so I was a bit skeptical about the trade because it looked like equal lows, but yeah, I bought it here. Stop loss below the strong low. Did not risk like I normally do because we had equal lows in here, targeting the external range liquidity, and news paid. Look at this. Whoa. That's it. See, like, did you see, like, did we look for any unnecessary sells from here? No, right? You can't. You can't. Okay, because why? Bullish, external range liquidity. Okay, but yeah, this wasn't the setup I was going to show you. Let me show you the next one. Now, once again, we wait. until Asia ends, next day's Asian session. So that is from 3:30. Yeah, 3:30 to 9:30 a.m. my time. There we go, Asia. Now ask yourself, is this day, is the Asian high a strong high? No, right? Not a strong high. It created a pool of liquidity. So what is it doing? Building up all of this liquidity right below the monthly point of interest. Can you see that? Right below the monthly order block that we marked out earlier. You remember that, right? Look at this. Now, what's the next thing we take into consideration? Timing, right? Timing. So this manipulation could happen during London Open, London session, or as most of the time, since this is gold, this could happen with the New York Open or New York session. Look at this. Now, for me, New York opens at 5:30 p.m. my time. Okay, so that is, I think, 8 a.m. New York time. See? Yeah, 8 a.m. New York time. Now, I'm going to take a sell here from the monthly zone. Stop loss above the rejection blocks. See that? 20 pips. Because this is gold, you can't expect 2 to 5 pips stop losses on gold. Okay, and your first target will be the Asian low. And since it is coming from a monthly zone, where will your final target be? External range liquidity. Okay. Now remember, this is your first target. Okay, this is your first target, 280 pips. Okay, now look what happened. There we go. Right at 5:30. Can you see that? New York Open, a manipulation of Asia. Buyers are getting in. Look how the trend lines are forming. More and more buyers are getting in. Same exact setup. But what happens? There it comes. Boom. See that? You're done. You have 280 pips in 3 hours. Okay, that's the beauty of trading gold. Okay, so you pay yourself here. Now what do you know? Major breakout structure bearish, counter trend bearish. What are you going to do? Are you going to look for buys anymore? Are you going to bother about any of these zones anymore? No, you're going to look for sells now. Okay, so you extend the targets here. So you're risking 20 pips to get 580 pips. Okay, now we have a strong high formed on the H1. How do we know it's a strong high? Liquid taken, structure broken. Now we wait for another. There we go. And look at this. Another range is created on the 1 hour from here to here after this bullish breakout. Can you see that? Okay, so that's why I told you, don't fear pullbacks. Every single move to the upside is only another opportunity. Okay, so I was looking for a sell from actually, I think it was 4 hours. Yeah, from this order block, but never got there. See that? Never got there. It just started falling for some reason. That's okay. And then look at this. Into the external range liquidity. Can you understand that? Now, did you see where the sell came from? Did you see where the sell came from? Monthly order block. Okay, now, do you think anyone will have an idea what this point of interest is? No, right? Just a random line, but a sniper entry from there. Okay, so that's the thing. Not even this rejection block. Okay, it was from a monthly point of interest. Okay, so this is how powerful the higher time frame zones are. Okay, so can you understand that example? Hope that one was clear. Okay, yeah. So that's the monthly one.
Yeah, I've got a question. What's your timing for gold?
I'm sorry?
What's your timing? No, I mean like your timing. Like if you're using timing, like is it New York or you're using London for gold?
Mainly gold will be traded during the New York session. Okay, but doesn't mean there will be no setups during London. Okay, there will be setups during London, but main trades will be happen during the New York session. Okay, main trades will be taken during the New York session. Can you understand? I hope that's clear. Okay.
Yeah.
Okay. Now look at this. So for that month, what did we have? The order block, right? Look at that. Like you can still hold it. Okay, we're still in profits. But then, so I told you about 4 different POIs, right? Order blocks, breaker blocks, rejection blocks, and then imbalance. Look at that. You have the high of the month if you manage to get it that day. You're in profits for the next 30 days then. Okay. So that's that. Then where will the next monthly candle open? In here, right? Then what's your next point of interest? Imbalance. Can you see that? You understand why that's an imbalance, right? Because the next candle opens here. So from here to here, you're going to have a gap. Okay, you're going to have a little gap. If the imbalance and the rejection block is very close to each other, then you can refine it to the rejection block itself. But yeah, right now it is not that close, right? See, 240 pips away. So you can still use the imbalance as a point of interest. And then, yeah, did a slight refinement of this, a very small refinement of this. See, this was the monthly imbalance into this one. Can you see what is that? Rejection block once again. Okay, into this 4 hour rejection block. And then we have liquidity below it. Okay, we have liquidity below it. Now look what happened. Okay, tapped. Okay, so something bad happened here. Look at the drop. Look at the drop from the monthly level. Okay, so I was a bit greedy. I did not want to take out anything, okay, because we know that anyway, the major breakout structure is bearish.